It is make or break time for ICP. The Internet Protocol finds itself at a pivotal moment where the bears look to be taking control of the situation. With a bit of luck, the bulls may be able to prevent a complete disaster. Guys, let's jump down into the charts and take a look at what's going on with ICP. Currently, ICP, the Internet Protocol, is finding support on the 200-day exponential moving average. However, it has most recently lost the support level of the 50 simple moving average and the 50 exponential moving average, and this puts the bears in slightly stronger control than the bulls. At the moment, the bulls are still looking at the market with confidence. Being above that 200 EMA is a strong sign, but losing these and now these being as resistance for ICP, it could be a pretty damning time to be invested in any potential long positions on ICP. What we're truly looking for here is either a breakout confirming a bullish move to the upside or a breakdown confirming a bearish move. At the moment, we find ourselves sandwiched between the 200-day EMA as support and the 50 EMA as your resistance. And until we get a clean break above or beyond, these EMAs and SMAs are not going to be giving you any clues as to where the price is going. So for that, we are going to have to dive a little bit deeper into some more advanced technical analysis to help us understand where we have the higher probability of the next move for ICP. Let's start things off with some Elliott wave theory. Elliott wave theory is a little bit complex, so do bear with me as I go through what I think is going on here from the current wave structure. Now, we do see an interesting movement to the downside. This slippage for ICP was 49.25%. It spanned the 27th of March through to the 13th of April. And to look at this, we do see ourselves with the idea of a 5-wave movement in here. The current move to the upside is looking quite corrective, so my concerns are that we are to see more slippage to the downside, breaking down lower than that 200-day exponential moving average that we were talking about earlier. Likewise, though, where we are on support. So if we find support here, the bulls might be able to break out of this bearish pattern and take us a little bit higher. Let me show you what I'm looking at here. We can see that we had some closed candles here, and we can see that we had some resistance here. So at the moment, you can see that this previous area of resistance, and we've been dancing around it for some time, and this is where we're finding support right now. So although we've had this 5-wave move to the downside, we can of course take a look at this as a giant A, B, and C irregular flat correction, which is what I was talking about previously. Alternatively, we do look at this maybe as an ABC structure over here with the ABC structure losing the 200 exponential. Okay, so we know that there's a couple of different ways that this can play out, and it's all critically and pivotal from the moment where you start drawing your waves. So Elliott wave theory is very accurate if drawn correctly. If it's not drawn correctly, you end up in a world of pain. Now, looking at this, we have a very corrective move to the upside. It is a simple 3-wave pattern here, and you can kind of see it playing out like this. Okay, let me put that back on like so. Now with this, we obviously have to also acknowledge that we have the idea of a 3-wave movement down here as well. So we know that we have a 3-3-5. The odd part of this is that we have broken up into higher highs during this move, but we haven't broken down into lower lows during this. In fact, we actually have higher lows whilst we have higher highs. Now, typically, an overlapping nature of all of these candlesticks does tell us that it's more bearish than bullish. It tells us that there's actually lack of momentum to the upside, and all we're doing is ranging between the highs and the lows. Now, it can, of course, be bullish if there was lack of overlapping structures. But for this particular pattern here, I am leaning more towards thinking it's an irregular flat correction like this, basically looking at that previous wick low that we had over here on the 13th of April as our current end of structure, meaning that we should be thinking more bullishly than bearishly. Now, if I throw on those EMAs and SMAs once again, you can see that, yeah, we are still above our 200-day exponential moving average. It is aligned to the idea of a running flat finishing off down here on that 5th wave movement. This move to the upside and coming back down to support level, if we can hold this as support and look for a close position above the 50 EMA, 50 SMA, then that, I think, in my opinion, is going to be be the time to potentially go long with a stop loss lower than the 200-day exponential moving average. We can target out a new higher high because I do think that's the most likely scenario, and we'll get a good risk reward ratio of about 1.6. Now, of course, as I've said before, and I'll say it again, if I am to be leverage based trading, I'm going to be trading on BitGet or on Blowfin. Those are my two go-to exchanges, and there are links in the description below if you haven't yet signed up. Signing up with the links in the description below makes you eligible for up to $30,000 or $5,000. It all does depend on, of course, the amount that you deposit and the amount that you trade, and so many other variables. Not all countries and jurisdictions are eligible, so do follow the instructions and the rules all on their websites. All links are in the description down below. So knowing that we have, at least in my opinion, a higher probability of a break to the upside, that means that we want to be looking for those confirmations of breakout. Let's go ahead and take off the Elliott wave, and let's throw on the smart money concepts and see what that gives us as well. So when we turn on smart money concepts, I will turn off the EMAs, and here we can see that things are still in bullish structures. Okay, so as we can see, if I zoom out here, we had the initial change of characterization into a bullish state of play. This happened over in November of 2023. We then had a break of structure just most recently on the 25th of March, confirming that we are still bullish on ICP. So Internet Computer Protocol, I should say, is still, of course, in a bullish structure. This move to the downside, as I said, an irregular flat correction, running flat correction, it is showing us that we are, of course, not in a bearish pattern. Unfortunately, this is actually, or fortunately, this is actually holding up incredibly well, and we are at the moment still looking for that next move upwards. We can see that we did get rejected on the 50% level on the fibs, the equilibrium area on smart money concepts. Okay, so we do know that everything here that is going on is still looking rather strong. We have the weak high, but we did get rejected from equilibrium. This is pretty typical, and it could be a part of the first structured move to the upside. Let me show you what potentially is on the horizon here for ICP. So if we were to kind of think about where things are going, both from an Elliott wave and smart money concepts perspective, we want to be thinking about targeting out $19.40 to $21.89. And again, I think you're going to break that high and you're going to come up with a new higher high and get rejected. I don't think we're going to go straight through it. I don't think we've got that kind of momentum for the price action at the moment on the ICP. But everything else is gearing up quite nicely. I'm not terribly too concerned about it. It does look like actually ICP is running quite nicely and still has plenty of room to the upside and to continue its run upwards. Guys, you can let me know what your thoughts are in the comments down below, but guys, why don't you check out this video right here where I'm talking about what's going on with Bitcoin, the market leader.